We want to. You can read the first question.
Okay, for guidance here, okay. During its first month of operations, a business made purchases as shown in the table below. Total sales counted to 720 units. All sales were made at $4 per unit. All calculations are carried out at the end of the month. Calculate the profit of the month and the inventory value held at the end of the month using the FIFO approach to the issue of the units of sale, the LIFO approach to the issue of units for sale, and the average cost approach to the issue of units for sale. Whoa.
First in, first out. Okay.
First out.
First in, first out. How do you do inventory valuation using first in, first out? Okay. This is very, very important for you to understand. And I will draw a very simple table for you. I show you how we value the closing inventory. To show you how we value the closing inventory for this one.
Okay.
You need to calculate the profit and the inventory held. So we start with the profit. So for the profit, to value the profit, what we need to do is to come up with let's come up with this simple table. I'm sure I'm using the better marker that you can manage to see. Right? The units here. Of course, the unit price. My handwriting is not very good, but don't worry, you get used with it.
It's okay.
And then you have the pounds here, the currency. I don't know how to write this, you know, the symbol for this currency, you know.
Yeah, it's just
it's okay. So we have the number of units that have been gotten. First of all, we have been told, right, that we want to calculate the profit, the first thing that we need to do. So we know that profit is equal to what? Profit is equal to sales
minus revenue.
Minus sales minus costs or expenses, isn't it?
Yeah. Isn't it cost of goods sold?
You say the cost of goods sold?
Yeah.
The cost of goods sold, that is gross profit, of course.
Oh, that's
then when we less expenses, we have net profit. You remember?
Yes.
So now let's start with the sales, number one. Sales, how many units have been sold according to the question? Let's get back to the question. It says that the total sales amounted to 720 units.
Yes.
And all of them were valued at 4 kwacha.
Okay.
Oh, 4 pounds, sorry. So the units are how many? 720. The unit price is 4 pounds, right? So which means the total value of sales is 720 times, yes, multiply by that.
720 times 4. 2880.
280. Okay. 280.
No, 2880. 2880.
2,880. 80.0 pounds. Okay. Yes. Then we have the cost of what? Cost of what? Have to less the cost of sales, isn't it?
Sales.
You remember the way how you have just outlined it? You less the cost of sales. So under the cost of sales, we know how much we spent when purchasing. And this is very, very important. You are using first in, first what? Out. Which means when you are purchasing, when you are issuing those that came first in the stock will be sold first, right? First in, first out. What came in first will be sold first, followed by the what? By the other.
Okay.
Okay. Yes. So we purchased how many units? 200 units. That's what we are told. We're told that we purchased on 4th of May, 200 units. So we have to, when we were selling, like first of all, we sold the first units that came, right? This first slot, the one that came at 4 of March. So we sold these. Okay, so 200 times 2. You get the point?
Yeah, because that's the number of units that were purchased and sold at that price.
202. So you have the units at 200 at 2, giving us 400, right? And then what followed next? We need to issue 720 units altogether. But what was purchased? I want you to realize something. When you add these purchases, how many units does it give you?
If we add these purchases, 200 plus 450 plus 550. 1,200.
Yes, 1,200. So they are more than 720. We want to issue 720 units. We have already sold the 200 out of 720. So we have remained with what? How many units?
720, 480 units.
Let me say, when you have already issued 200 from 720, remember we have to sell, have to sell 720.
Okay, we've already sold 200 from 720. We are remaining with 520.
Yes, 520. So now we have to sell 520 from which slot? From which consignment? For 16 March and for 23rd. You're following?
Yes.
So it is first in, first out. So the next slot that should go is for that one for 16 of March.
Okay.
You got it?
Yeah. So
this one has to go first.
So 520 will go on the 16th March.
Yes. So we have to issue first 450.
Yeah, we have to first.
Yes. You're following, eh? We have to issue 450 first. Yeah. From the 520 that is remaining, we have to issue 450 from this second slot that came in first. Yeah, in this case, 200 is no longer there in our storehouse. We just have those that came on the 16th. They are 450. So we want to issue 520, isn't it?
Yeah.
So we have to issue the whole 450 at its price, because this is first in, first out. So we are issuing the whole 450 at what price?
2.50.
2.50.
Yes.
You can multiply.
450 times 2.50. 1125.
1125. Is that right?
Yes.
So now we have issued how many? 200 plus 450, that's 650, right? Is it?
That's 650.
Yes, we have sold the 650. How many is remaining from 720?
720.
We have to issue 720.
70.
70, yes. So we can just go ahead and issue 70. Obviously, 70 now will come from which slot? The next one that came first again, which is the last one now. So if you had another slot maybe for 25th, you could have gotten only 70 from 550. Only 70. So at what price? We value it at 2.75 pounds. Okay.
Which is 192.50.
2.75, she says is 192.50. Right. And then we add everything. Add that. Find the total cost. What is our total cost?
1717.50.
1717.50. We less that to get the net what? The net profit.
Mm.
What is the net profit?
280
From the sale. Yeah.
Minus answer, which is 1162.5.
Like this.
Yes.
This is our what? Our profit. Is that right?
Yes.
This is our profit.
Is this what you were supposed to do, like for the whole question?
Yes, that's what you should have done.
So easy.
It sounds very easy, eh?
Yeah.
Very easy. And it is.
It is actually. It's even better than at least I feel like here you don't have to really analyze too much. It's straightforward.
Yeah. As long as you know the concepts, eh? Yeah,
Yeah.
it's easily understood. So this is the net profit. Because the question is telling us what? What does it say? Find the profit and what? The inventory. So I found the profit, but we need the inventory now.
Okay.
The value of the inventory, the closing inventory,
So
of
that's
course.
the first in, first out approach.
Yes, that's the first in, first out. You have to issue what, in short, you have to sell what came out, what came into the storehouse first.
Okay.
That's first in, first out.
Okay.
Right. So now, we need to value the inventory. Okay. We need to value the inventory. Of course, the closing inventory. How much is the value of the closing inventory? So to value the closing inventory, you just have to, the last figure is valued at this price. This is the last store, right? The closing inventory should be valued at this much. So we just subtract, okay? We just have to subtract the value.
Okay.
What is, first of all, what is 550 minus 70?
550 minus 70 is 480.
480 units.
Yes.
They are the ones that have what? Remained.
Okay.
Isn't it?
Yes.
480 units have not been sold. Because we just sold everything but apart from these. In the last slot, the 23rd slot, 23rd of March, we just sold 70 out of 5. There are how many? There are 550.
550, yes.
And then we just sold 70, so we remained with 480 times the value, which is 2.75. So what's the closing inventory?
480 times 13,000, 1,320.
1,320. 1,320. Any question? Pounds. This is very easy.
So we just had to find the value of the closing inventory, basically.
Yes, the closing inventory, and then you charge it at the price. Okay, the standard price for the closing inventory.
Okay.
Okay.
Yep.
there is no question, and we are understanding.
Yes, sir.
How true is that? It's very true, right?
Yeah.
Okay. Now let's use the other method, which is the last in, first out. Okay. Last in, first out. LIFO. Last in, first out. Of course, in the way how we value the cells will still be in the same way, and obviously the value of cells will still be the same one, right?
Yep.
It's a bit similar to first in, first out, only that now you change. When you start selling, first you issue what came what
Last.
time? Last. That's what you begin with.
Basically, you just change the order for this one, but I have to still reach the target of 720.
Exactly. So now look at what happens. So first thing that you issue are how many units? 550.
50 times 2.7.
And what is their price?
2.75.
2.75. That's what it means. At what is the value?
1512.5.
0.5. Okay. We go to the, so out of 720, we have sold how many? 550, right?
Yes.
How many are remaining? 720 minus 550.
170.
170. So let's go to the second slot. What should come next, which is the 16th transaction, isn't it? Is it enough to give us 170 units?
Yeah, I mean, we can minus. No, it's not. We just have to use the 170, I think.
Okay, let me rephrase the question. When you look at the units that we have on the 16th, which is the second slot, is it enough to give us 170 units? Can we get 170 units from?
We can get
Exactly.
170.
That was my question. So we'll get 170 units from where? From the second slot. And what was the value thereof?
2.5, I think.
2.50.
425.
425. When you add, we are done. Like when you add these, they equal to 720 already. Have you seen that the last slot has now not been touched? The 200 hasn't been touched now.
Yeah.
We managed to sell 720 before reaching there.
Okay.
What do we get?
425. Wait, 425 plus 1512.5. 1937.50.
1937.
And if you minus it by 28 minus answer, we get an answer of 942.5.
942.50. That is our profit.
Yes.
So we have found our profit. Is that right? What is the closing stock now? So from 450, we issued what? We issued 170.
Yes.
Isn't it? So what remained?
It's 280 plus the 200 as well.
280 units plus 200.
Which is 480.
Now, we cannot add these together. Why? Because they are valued at different what?
Different prices.
Prices.
Yeah. Makes sense.
So the 280 is valued at what price? 2.50, isn't it?
Oh, yes.
Then the 200 at what value?
So, 2, I think.
Yes, it's valued at 2. Then you equal everything. What is the cost?
So 700 plus 400.
Giving
1,000.
us 1,100 as our closing what?
Inventory.
Is this hard?
No, this is the easiest I think I've come across.
Everything will be the easiest. Don't worry. We'll make everything the easiest for you. And so we go to the last method,
Okay.
the average cost method.
Okay.
So we see how we go about this one now, the APCO method. So just understand that for first in, we start with what came in first.
Yeah.
Last in, what came in last, that's what we start with. And just like that, just as the name may suggest. Then when it comes to the average costs method, it's more interesting, this one. So the sales is still the same. Okay.
Okay.
Value of the sales is still the same. Then when it comes to the cost of sales, okay, here when it comes to the cost of sales, you are not selling them in different consignments. No, we just the average price. Okay, I'll explain. We just add everything, all the units. The cost is 120. Then the price here that we are going to use, it is the average price. So I'll show you how to calculate for the average price. The average price of all the consignments.
Don't we just add divided by 3 since there are 3 prices?
No, it will not come out.
Okay.
Yes, it will not come out. The answer will not come out.
Okay.
It will refuse. So what you do, this is how you come up with, let me erase this one. So first of all, I show you how to come up with the average price.
Okay.
Yeah, how do you come up with the average costs? Yes, so you have the units that you sold. You sold 200 units at 2 kwacha, or you purchased. That gave you 400 pounds.
Yeah.
At 450 times 2.50, that gave you 1,125, right? And then the other one was 550. These are purchases price. The purchases at their respective prices. That gave you 115.12.
Yes. 0.5.
0.50. And then what you need to do is to add all these, the amount, add the amount.
Uh, 1125. 3117.5.
3117.5.
0.5.
Let's do it again.
Okay, 480.
Do this.
1125.
No, not 480. Okay, I see. My handwriting is 400.
Oh, 400 plus 1125. 12.50. 3037.5.
Mm-hmm. 0.50. Okay. Then in terms of the units, we are just adding all the units that were purchased. They were 1,200, right?
Mm.
550 plus 420 plus, just the units that were purchased. Is that right?
Yes.
So to find the average price, that average price at which you have to value all the inventory, you have to divide now the amount divided by the units. That is how you can find the standard price. So it will be 37.50 divided by 1,200. And what does that give you?
2.53125. So 2.53.
Mm-hmm. Mm-hmm.
2.53. The full number?
Okay, 53125.
Yeah.
Okay. That is the price. Okay.
Average price.
This is the average price. So in short, to find the average price, it is the amount, the total amount of the purchases divided by what? The units of purchases. That will give us the amount.
Okay.
The average price. Is that right?
Okay.
Yes. So now to find, keep this figure, keep the what's this, the price. Then our profit now, it will be sales 288 what? 0 minus the cost, eh? I've not followed the table now. I'm sure you are now conversant with the table. 720 units multiplied by that price. It was 2 point what?
72.5. The average?
Yes, the average price.
2.53125.
Yes. How much does it give us?
Times 720. 182.50.
180.
No,
182.
1822.5.
Okay. 0.5. We let's start from the sales that we may have the profit.
Hello?
How much does it give you? Yes.
Oh, you're waiting for me to do it.
Yes.
That's 2880 minus answer, which is 1057.5.
105.
7.5.
7.5. 1057.5.
0.5, yeah.
Okay, 0.50. This is the profit. Is that clear now?
Yes.
Then about the closing stock. You have sold all the 720 units from, you are not getting them from different consignments. So you just say, find the closing stock. You just get what was total production. It was 1,200. That's what we purchased minus 720 that we sold. So the units that remain, 12,000. How many units remained?
1,200 minus 720. 480.
480. Multiplied by
The average.
the price, the 2.53125. Then the closing inventory or closing stock will be equal to
125. 1215.
1215, 1215. As simple as that. Is that difficult?
No. So we have to find both for the closing inventory and the normal, like the amount of like purchases that have been made, basically.
Exactly.
Okay.
Yes. So what is most important to note is that although the cost of sales and the value of closing inventories are different in each case, the total is always the same.
Okay.
Yes. You can find that the total is always what? The same. The total much that we are selling. So expenditure for the period must either become expense in an income statement or be taken into the value of the closing inventory. And that is what usually happens.
Okay.
Okay?
Okay.
Any question?
No, sir.
There is no question. And then we can go ahead to the next question then, if she doesn't have any question.
All right.
Read the next question.
A fire destroyed a company's detailed inventory records and much of the merchandise held at the time. The company accountant was able to discover that inventories at the beginning of the period was 60,000. Purchases up to the date for the fire were 200,000, and sales up to the date of the fire were 300,000. In past periods, the company has earned a gross profit of 30% of sales. Can you just scroll down a bit?
We have skipped question number 9.2.
Ah, okay. Sorry. I thought that was question, the first one. A company has an inventory of goods consisting of 4 different groups of items. The cost, retail selling price, and cost to be incurred in making the sales for each group of items is shown in the table below. Group of items, 1,000, retail selling price 2,400, cost of selling 350. Calculate the amount to be shown as the value of the company's inventories.
Okay, so we need to calculate the amount to be shown as the value of the company's what? Inventories. That's all what we need. So the guidance is that we can use the rule of the lower of costs and the net realizable value, and then we can consider each of the group items separately. That's what you can do. Actually, it's part of the examples in one of the lectures, should be lecture 5. This one, most of the concepts in here from lecture 5. Yeah, so just like the example. So this is what happens. Let me just show you what you do. So we have the group of items that we have, the group of the items. The group of the items is what we have. And then we have the basis of valuation that we have stated, basis of valuation. And then you have the inventories value that you need. You need the inventories value. The inventories value. Okay. So what do you need? Then the assets that you need, the items are item A, item B, item C, D. Then you can have the total thereof. So for item A, you need you start with the cost of the first item. The first item A.
Okay.
Item A has the purchase cost of what? 1,000. The same one shall be the value of the inventory. That's the value that you put, the purchase cost. This purchase cost, that will be for the first item. You're not given the quantities of the items, so you assume this is one item, just item B. Okay, one item. So the purchase cost is what you put as the value of inventory. Is that clear?
All right.
So you put 1,000 on the value of what? Inventory. Okay. Then for item B, what you can do to find the value of item B, because these are intermediate items, they're in between, okay, the different items. So you can less the retailing or the what should I say, the retail selling price, okay, minus the cost of selling. Okay, so for example, the retailing price here for item B is 800, right? Okay. You less 200, the cost of selling, and that gives you 600, isn't it?
Yes.
Yeah. So that's the value of inventory that you write here for the second item, 600. What is the basis of evaluation? So we are using the net realizable value, okay? We are using the net realizable value. Here we use the cost for the first one. We use the cost. The net realizable value is also called selling price less cost of selling. Right? That's the basis of valuation. Okay. Okay. The net realizable value, I'm repeating, it is same as selling price less cost of selling. That's net realizable value. It's also a basis of valuation. Even you can value this at cost. Cost is also a basis of valuation. Like the first one was valued at cost. Okay, first item. Then the C item as well, we can still do this at the net realizable value. Okay, for that case, we will do the same thing that we did for C or for B, right? Okay. What do you get?
2,300 minus 300, yeah? Which is 2,000.
It is giving us 2,000. So you record 2,000 here. So then you go to
you just minus the, if you please go back to the question.
You subtract the selling
the selling price minus the cost of selling.
The cost of selling, that is the net realizable value. Okay. There are different bases of valuation. Okay, we are valuing the inventories. So one of the ways is net realizable value, where you less the selling price minus the cost of selling.
And the purchase cost is
it's also a basis of selling. If you use the purchase cost, then you just get the cost alone, the way how it is.
Okay, okay.
Okay.
Right. Then the next one, 3,800.
So the next one, we can use the cost, the purchase cost, which means that it will be what? It will be 3,000, right? Because the purchase cost is 3,000. Then you add all these to find the totals, which is giving us how much?
For D, you used the
cost.
The purchase cost. Why did you do that?
Why did we use the purchase cost? So these are the it is the last actually these are items that are arranged in order, right? So the last item you can use the purchase cost. Yeah. So these are different methods that you have to use, but according to what is this? According to this guide that has been given here, you have to use the realizable values, the net realizable values, and the cost method of valuation. There are different methods of valuing, okay? So you can still value this using the net realizable value, but the way how it has been, it's just a suggestion that you may use for the first and the last item, the costs.
Okay.
It's not really that it's fixed that it has to be like that, no.
So we don't do the retail selling price minus cost of selling for D.
It's not wrong, but advisably you use the cost being the last item.
Okay.
Yes. Is that right now?
Yeah.
So if you had 5 items, you could have used net realizable value up to the last one you use cost. It's still okay.
Okay.
These are basis of valuations. And then we close by adding the inventories, the total sum of the inventories. Remember, the question is asking us to calculate the value of the inventories.
Okay.
Yeah.
So
what's the value of the inventory?
100 plus 1,000 plus 600 plus 2,000 plus 3,000, which is 6,600.
6,600 as the value of the total inventories. Is that right?
Yes, sir.
Okay. Any question?
No.
Exams made easy, right?
Yeah.
Exams are made easy. So now, can now read the next question.
A fire destroyed a company's detailed inventory records and much of the merchandise held at the time. The company accountant was able to discover that inventories at the beginning of the period was 60,000. Purchases up to the date of the fire were 200,000 and sales up to the date of the fire were 300,000. In past periods, the company has earned a gross profit of 30% of sales. Calculate the cost of the inventories destroyed by the fire.
Yes. So first of all, what kind of inventory is this that has been destroyed by the fire? Is it the opening inventory or the closing inventory?
At the beginning of the period. So it's the opening inventory, yeah?
When was the fire? When did the fire got the? What's this? The inventories, the units.
Fire destroyed a company, the inventory much for the company accounts. The fire, like when because it says, I'm following the sentence saying that the accountant was able to discover that the inventories at the beginning of the period was 60,000.
So the opening inventory was there.
So this is the opening inventory, yeah. Then purchases up to the date of the fire were 200,000. So there were 200,000 purchases that were made.
Yes, they purchase.
And sales up to the date of the fire were 300,000.
And they sold up to that much.
Yes. And then in the past periods, the company has earned a gross profit of 30% of sales. Yeah, so I mean, after the 300,000, after the fire, until the fire.
Until the fire.
Until the fire, there were 300,000. And then I think, and it says in the past periods, meaning before the fire, yeah? The company has earned a gross profit of 30% of sales. 30% of 300,000, if I'm not wrong, is the gross profit that they've earned. Yeah.
Okay, I get the thinking. Anyways, so thank you so much for that. Yeah. So what is there is we need to cost the inventory.
Yeah.
And yes, that was there at the end of the period. This fire did not hit at the face of the period. They would not have time to start selling, doing what? It was at the end. Like. So we are establishing the closing inventory, okay? Because after beginning, having the opening inventory, they are able even to do purchases, they are able to trade, to sell, to do even that, whatever they did up to the time they end even the profit. So we are looking for the closing inventory, okay? So what can we just do to find the closing inventory? We need to use our knowledge of the simple statement of profit and loss. Yeah, so we are told that the sales to the date of the fire were how many? There are 300 pounds, right? 300,000 pounds, isn't it? Those were the sales. That is what the question says, isn't it?
Yes.
Then 90% was profit. So let's do the profit of this, the 90%, because we are not given the cost of goods. So we can calculate for the cost of good using the what? Using the profit. We need the 90% of that. What's the 90% of that?
90%.
Yes, of 300,000.
Isn't it 30%?
Oh, 30%, sorry.
Yeah. Okay. Divide by 100 times 300,000. 90,000.
90,000. In my head, I had calculated and I was commenting on that. 90,000. That's why I was saying 90%. It was 90,000. So if you less now, you know that to find the cost of sales, how do you find the cost of sales? Yeah, you say sales less cost of sales equal profit, right? So if we have the profit, we need the sales. It to be sales minus
if
the
you want to
profit.
find out, yeah, profit equals to cost.
Right. So let's find the cost.
So 300,000 minus 90,000.
What is the expected cost?
Just a minute, I'm finding out. 210,000.
Right. 210,000 as the value of cost. Then the inventory is at the start of the period now. The opening inventories. Let's find the opening inventory. We are given the opening inventories, isn't it?
Yep.
The opening inventory. And about the opening inventories, we were told that they were equal to what?
60,000.
They were equal to 60,000. Opening inventory, 60,000, 60,000. And the records of purchases, we add the purchases. How much did we purchase?
We purchased 200,000.
200,000. 200,000. And right, we purchased the 200,000. And then the costs of the goods available for resale would be how much? Just to add these, that plus that, the cost available for resale. Cost of goods.
260,000.
260,000. And then we can put take the difference with the expected costs.
Take the
with
difference
the expected cost.
So
this is the actual cost.
Minus 210.
Expected 50, cost. 210,000. So 50,000 is the what? Is the estimated closing inventory.
Okay.
Which is just the difference between the actual cost minus the expected cost. All right. Right. So that is the closing inventory. Any question?
No, I think I'm clear on this as well.
You are okay? You are okay even on this one, right? So basically, this is what we have. You don't need really to panic so much and like taking things as if they are very difficult. Maybe they are really, really challenging, but